So welcome class, this is CPA part 1 section 1, and we will be doing the August 2021 paper, specifically question 2. This is question 2 of that paper, question 2 of the August 2021 sitting. So question 2. Alpha Omega operates a retail business. He has not employed a qualified accountant and therefore has not maintained proper accounting records. The following information was extracted from his books for the end at 1st March 2020. So accounts receivable 2,000, bank overdraft 240, accounts payable 1520, electricity expenses accrued 10%, bank loan, allowance for doubtful debts, freehold property, motor vehicles, net book value, furniture and fittings, net book value, inventory, we also have that figure. So the following transactions took place during the year ended at 1st March 2021. Sales and purchases on credit amounted to 8320 and 7600 respectively. And then the following transactions were carried out through the bank account. Electricity expenses, general expenses, interest on loan, drawings, loan repayment on 30th of September 2020. Collections from accounts receivable. This question you can download it just underneath. You can download it so that you follow it clearly. Salaries and wages, purchases of furniture, payments to accounts payable, sales cash, purchases cash. The business operates at a gross profit of 25%. Accrued electricity as at 31st March 2021 amounted to 76,000. And now it's very important for you to go through all the items in the question, so that you can familiarize yourself. And as you go through the question, basically you will be pondering over them and knowing where to place them. It's very important that you go through the entire question, what you are just doing. So accrued electricity as at 31st March 2021 amounted to 76,000. Bad debts of 80,000 were written off during the year ended at 1st March 2021. The allowance for doubtful debts is to be maintained at 5% of the outstanding accounts receivable at the end of the year. Then during the year ended at 1st March 2021, the business received discounts of 160,000 and allowed discounts of 280,000. Loan interest paid was for a half a year up to 30th September 2020. The business depreciates motor vehicles at 20% per annum on a reducing balance method. A full year's depreciation is provided on a motor vehicle acquired in the course of the year, and no depreciation is provided on a motor vehicle disposed of in the course of the year. Number 9, the motor vehicle disposed during the year ended at 1st March 2021 had been purchased at, that is not 1 shilling. I'll have to check that one. I'll have to check that. It is not 1 shilling, so just allow me to check it. Just allow me to check it before we can proceed. Be sure. So this is the original question paper. So the motor vehicle disposed during the year had been purchased at 1 million and had an accumulated depreciation of 488,000 at the time of disposal. Furniture is depreciated at a rate of 10% per annum on cost and is prorated to the period used in the year. The additional furniture was purchased on 1st October 2020, while the cost of furniture held on 31st March 2020 was 1,600. Yeah, so we are required to come up with a statement of profit or loss for the end at 1st March 2021, and then the statement of financial position as at 31st March 2021, 12 marks and 8 marks respectively. Ideally, this question should take you at most 40 minutes, but the ideal is 25 minutes, because normally we have 5 questions to be tackled in 3 hours. So if you can take 30 minutes per question, that will be good enough for you. at most let it go for 40 minutes, because just by looking at it, this is quite a complicated question. So let's try to solve it. That is the question. This is the question paper. So let's go back to our working platform. So this is the question. I hope we'll be able to remember those figures. Okay. Now, where do we start from? We've already known that this is a case of, I think it's a case of incomplete records, because we've even been told that there was an accountant here who was employed. He has not employed a qualified accountant. So the accountant who was in place was not qualified, and therefore he had not maintained proper accounting records. So these are not, we'll just simply call them the incomplete records. So we'll try to come up with the complete records. Now, where do we start from? This can be quite complicated, but let's start from here. The statement of profit or loss for the year ended at 1st March. So they want that 1st March 2021, and statement of financial position as at that 1st March 2021. Yeah, that 1st March 2021. So having known that, let's come back here. The following information was extracted from his books for the year ended 31st March 2020. So this most likely was the starting balances, and from this we can get the capital that was available at the beginning of the year. This is simply the beginning of the year, and what they want us to come up with is at the end of the year, which is 31st March 2021. So these are the books we're supposed to prepare. But at that 1st March 2020, this was the situation. So what are we supposed to do? Maybe before we can proceed, let's just work out the opening balances in terms of, in fact, we can just find the capital right away before we can proceed. And if you check here, I'm very sure you're not going to see capital anywhere, because capital is basically supposed to be found here. The difference between the assets at the beginning of the year and the liabilities at the end of liabilities at the beginning of the year. So we talk about the assets at the beginning of the year, the liabilities at the beginning of the year. What are we supposed to come up with? With something called the statement of affairs. Statement of affairs, and this is as at 31st March 2020. Statement of affairs. So what you are supposed to do is simply the assets. So we'll do the assets and then do the liabilities. So what are the assets? Let's identify all the assets as at that date. Accounts receivable is an asset, so we simply write them as they are. In fact, instead of struggling to go down there, let's just do it here. It's not a complex thing, and emphasis is put on your understanding, so make sure you just follow and understand what we are doing. So we'll call this a statement of affairs, and then say as at 31st March 2020. Of course, you can have the name here. This is Alpha Omega statement of affairs as at 31st March 2020. Then you can have the columns here if they are ideal, if they are required. And you can see they have restricted the zeros, so you might also want to restrict the zeros. So we'll start with the assets. Accounts receivable, this is definitely an asset. Accounts receivable are the debtors. Debtors are an asset. So there's not really a big deal. You can choose to arrange them non-current, current, but what is very important in statement of affairs is, let's get the assets. Let's get the liabilities, let's get the difference. The difference will be the capital. That is it. You can choose to, to arrange them in that order. But what is important is the assets, less the liabilities. That's what is of our interest right now. So accounts receivable, 2,000. It's good to put that in the inner column so that the totals will be taken to the outermost column. Bank overdraft, of course, this is an overdraft is a liability. Accounts payable, it's a liability. These are the creditors. Electricity expenses accrued is a liability. Accruals are a liability. It's the prepayments that are assets. And then 10% bank loan. Of course, bank loan is a liability. It's a liability to the business, an obligation the business has to meet it. Allowance for doubtful debts. This is also a liability. We can treat it as a liability, or we can simply reduce the accounts receivable by the same figure. So you can choose whichever way it will work. So for the sake of it, let's treat it as a liability. But we can as well say 2,000 less 100 to get 1,900 as the value of the accounts receivable. Then freehold property, of course, this is an asset. So we are interested in assets first. So freehold property, this is the value, the cost, but they have given us as the value as at 31st March 2020. So we'll pick it as it is. Freehold cost 2,400. Then we'll have motor vehicle. Net book value is 3,000. So we pick it as it is. Then furniture and fittings, net book value again is 960. We pick it as it is. Then inventory 1560. We pick it as it is. Yeah, because they have told us these were the what was in the books as at that first March. So by just working out this, we'll be on our way towards getting. Try to get the calculator, so we can just do it here. For that calculator, there we go. Let's open it. Just a standard one will do. So we want to add this. This is 2,000 plus 24, that is 44, plus 3,000, 74, plus 960, 8360, I think, plus 1560. I think at that level we now need a calculator. Let's see this calculator of ours. It's hanging. Don't know why it's hanging. There it is, showing up. So meanwhile, we go to liabilities. We'll come back to the calculator. Let's give it time to open up. So then we have these are assets. So you might want to indicate assets, and then you might also want to indicate the liabilities, so that we start from here and we said bank overdraft is a liability. Bank overdraft is a liability at 240. So the total here I'll bring here. Bank overdraft liability 240. Accounts payable 1520. Accounts payable 1520. Then electricity expenses accrued. Electricity expenses accrued. How much is that? 60. Then 10% bank loan. 10% bank loan. How much is that? 10% bank loan is 2,400. 2,400. Then we have allowance for doubtful debts. I told you this can either doubtful debts. You can either less it from accounts receivable, or you can bring it down here as a liability. So it's the same. Accounts allowance for doubtful debts is 100 shillings. Do you have any other thing? I think those are the 5 liabilities. The remaining are. So we've captured everything. So again, get the total, put the total to the outermost column. Let's see if our calculator is alive now. Still not yet alive. Let's just do another one. Calculator. Yeah, good. Now it had picked, and calculator. There we go, good. So 2,000 plus 24 plus 3, that is 74. So 7,400 plus 960 plus 1560, like that. So what do we get? 76,520. So you simply come here and write 76,520, 76,520. Then we need to add this other part. So that will be 240 plus 1520 plus 2460. I've added the 2460 plus 100. This gives us 4320. So we come here, 4320, and we less this from that. So that will be is this really 76? Then there's a problem. We must have added wrongly. We are starting on a wrong foot. Let's just redo this. This is 2000 plus 24 plus 3000. That is 4,000, 7,400. So 7,400, the first three, plus 960 plus 1560. So that gives us 9920. Yes, 9920. There was no relationship between this figure, the figure that we had gotten, and the as assets and liabilities. Now at least they rhyme. So 9920. So let's come back to the calculator. 9920 minus 4320. 4320. That gives us 5600. 5600. So this becomes our capital for the business. So capital for the business is 5,600. You simply take assets at the beginning, less liabilities at the beginning, you have the capital. That is if you are not given the capital. So we are done with this first information, unless if we will require it again as we move on. Then the following transactions took place during the year ended at 1st March 2021. Sales and purchases on credit amounted to 8320 and 7600. That will affect the gross the trading account. The following transactions were carried out through the bank account. So these transactions were carried out through the bank account. Again, this is a point that we might want to just work out immediately because there's no need of carrying it forward. Let's just work out this right away. We can just come up with a bank account. Bank account, this is credit side, this is debit side. And of course we have shillings with zeros restricted, shillings with zeros restricted. So let's go straight to this. The following transactions were carried out through the bank account. We've restricted the zeros. So of course we have to start with the balances. So let's just find out from the previous this information how they started the year. And you can see, bank, we had an overdraft of 240. In the bank, there was an overdraft of 240. Any other information from the bank? There's nothing else from the bank. So, bank started with an overdraft of 240. An overdraft is normally a credit balance. Bank overdraft of how much? 240. That's how we pick it. So, that was the starting balance at the beginning of the year. Now, let's come back to this whatever transaction that took place through the bank. Electricity expenses 260. Of course, this is an expense. Anything that reduces the amount in the bank, we credit. Anything that adds, or basically when the bank receives money, we debit. It's an asset. Bank is an asset. So, and increments are debited, then a decrease is credited. So expenses, we are moving money from the bank, so we credit the bank account. So electricity expenses, this is an expense. So electricity expenses, how much? 260. Then general expenses 140. General expenses 140. There's no big deal here. These are just expenses as captured by the bank. Interest on loan. Interest on loan, yes, we paid. This is 120, so we just capture it as it is. Drawings, yeah, the owners of the company possibly withdrew some money, 240, so we capture it as it is. Loan repayment on 30th September 2020, yeah, that is within the year. Remember, the year started April to 30th of 2021. So this is within the year. So we'll simply say loan repayment. How much? 400. Then collections from accounts receivable. Accounts receivable are debtors. So we'll come here and say, this is money that is coming, collections. Basically, it's coming into the organization, so 7560. Then proceeds from sale of motor vehicle. We sold the motor vehicle, money came in. So proceeds, sale of motor vehicle. How much is that? This is 480. Then salaries and wages. Salaries and wages are expenses we pay. So we'll simply come here and say salaries and wages. How much? 640. Purchases of furniture. We are buying furniture. That means furniture comes in, money goes out. So money in the bank is reducing. Purchases of furniture. How much? 800. Then payment to accounts payable. Accounts payable are creditors, people who supplied us with whatever goods or something or services. So we are paying them. When we pay them, money leaves our bank. So payments, accounts payable. This will be 7760 on the credit side. Sales, cash sale, money coming in. Sales, when we sell, money comes in the organization. Purchases in cash, money leaves the organization. This is we are buying. Purchases, we are buying. Sales, we are selling. When we sell, goods leave out of the organization, money comes in. Purchases, when we buy, goods come in, money goes out. So here we are only capturing money. Remember, this is a bank account. So purchases 960, like that. So we get the total. We are already done with this. Get the total. The side with the highest figure, of course, will be the balancing figure. So we'll have to add all the sides and get to know how much before we can settle on the side with the highest figure. So 240 plus 260 plus 140 plus 120 plus 240 plus 400 plus 640 plus 800 plus 7760 plus 960. That gives us 11560. So let's just write somewhere. We'll compare with this, the debit side. So let's go to the debit side and get the totals also. Now the debit side will have 7560 plus 480 plus 2880. That gives us 10920. So the credit side has it 11560. The side with the highest figure will always be the balancing figure, and then we'll have here balance carried down, put the difference. So what is the difference? The difference will be 11560 minus, so 10920 minus 11560. That will be the difference. This is 640. So it means the bank at the end of the year had a balance of 640 shillings. That is it. We are done with the bank account. So all of this information that we have here condensed to that. That is the balance at the end of the year. And I think you're now seeing how we can go about this question. We have not even started answering the question. So the business operates at a gross profit margin of 25%. This, of course, will come during the trading account, accrued electricity. So I think we are good to go. Bad debts. I think the rest we will do as it unfolds. So let's go straight to the statement of at least we've reduced the, it was cumbersome. This looked complex, but now with those two things, I think it's a bit friendly. So we go to prepare let's go to the first question. So this will be alpha and omega. Alpha omega, I think that is the name. And then we say income statement. Income statement, that's what we are preparing. Income statement for the year ended. 31st March 2021. That's how you have the title, income statement, alpha omega for the year ended. Preferably we have 3 columns, so shillings, let's pick the zeros, shillings, let's pick the zeros, shillings, let's pick the zeros. Important that you have 3 columns. Of course, you are going to start with the cells. We start with the cells, and so let's get the cells here. So the first part, there's no need to refer so much there. Sales are here. So sales is 8320. This is credit sales 8320, and there was also cash sales. You can see cash sales 2880. So we need to capture all of them. So sales, credit sales, and cash sales. Now this is very important that we capture this information right. So sales 8320 and 2880. 8320 and 2880, like that. So this needs to be captured at least in the inner column so that we have room for let's feed that. Let's get the total. 8320 plus 2880. 2880, that gives us 11200, like that. That's how we go about it. Then of course we do the cost of sales. We always start with the opening stock, and of course opening stock will be the closing stock for the previous year, that is 2020. So we just come to this information. This is where the closing stock here will be the open stock here. So you can see inventory at that 1st March 2020, so that becomes the opening stock. So inventory 1560, that will be our opening stock. So we'll have opening stock here 1560. Then we have this is the opening stock. Then we have purchases. We have purchases, and purchases also we have credit purchases and we have cash purchases. So credit purchases is cash purchase, I can see it's 960. Credit purchases, it's 7600. So 7600, and because this is purchases, we'll have it here plus 960. We are having it there because cost of sales is normally on the innermost column. The cost of sales itself is what will go to the outermost column. So this will give us 7600 plus 960. That gives us what? 7600 plus 960. This gives us 8560. So come here, 8560. We add these two. It's important that we add the two. 8560 plus 1560. 1560. What do we get? 10120. This is, we say this is the cost of goods available for sale. Then we less what? Closing stock. We less the closing stock. We less the closing stock. So closing stock, go back to the question. Furniture, motor vehicle, loan interest, building, bad debts, accrued. Yeah, closing stock should be here. The business operates at a gross profit margin of 25%. The examiner, in his own wisdom, has chosen not to give you the closing stock directly. So it means we'll have to add the closing stock. He has given you the gross profit margin. Ideally, what we are supposed to do is just to get the less closing stock, get the cost of sales, get the gross profit. But he has chosen to give you the gross profit margin. So this is unknown. The figure we get here should basically come here, and this is closing stock is normally less. We less from the cost of goods available for sale. Less closing stock, we get this cost of goods sold, or cost of sales. This will be the cost of sales. So now this has not been given, this has not been given. There are unknowns, but he has chosen to give us the gross profit margin. Gross profit margin is normally gross profit margin is equals to the formula is normally the gross profit over sales times 100. Gross profit over sales times 100. So gross profit margin is already given us. It's 25%. 25%. So we can simply work out the 25% of the sales. It's basically 25% of the sales. We multiply sales by both sides. So 25% of the sales. That one is from the question. The business operates at a gross profit margin of 25%. So 25% of sales. Sales is 11.2. We simply take 25% of, so 25% is 0.25 times 11,200. That will be our 2,800. That is our gross profit. So this is our gross profit. Now the question is, if this is our gross profit, what is this? Remember, we normally say sales less cost of sales. So this is also supposed to be in brackets, because sales less cost of sales, you get this. So if this is unknown and you already have this, you have this. Yeah, I think it's very simple. It's very clear now. What you need to do is simply 28 minus 11,2. Get the difference. So 8,4. What that means is that this one automatically is 8,400. So that 11,2 minus 8,4 is 28. You can try that one. 11,2 minus 8,4, you will get 2,800. So if this is 8,400 and this minus this is equals to this, so what is this? It's the same thinking. So we'll do 8,400 plus 10,120. 10,120. What do we get? 1,720. So it means this one is 1,720. Like that. So you can try. We are just working in reverse. So let's try. So this will be 10,120 minus 1,720. So 1,720 becomes our closing stock. You get 8,400. So 8,400 will be our cost of sales. Then 11,2 minus 8,400. We get 28. That is our gross profit. So that's how it's we do it. So that's our gross profit. Having gotten our gross profit, we go to other incomes. Now we are starting the profit and loss. Other incomes. So other incomes. Let's go. Let's check if we have any other incomes. So we're almost done with the first part, the business. We are done with that one. Accrued electricity, bad debts, written off, bad debts, the allowance for doubtful debts to be maintained at 5%. So here we need to find out if there will be an increment or a decrease. If it's a decrease, it will be a gain. If it's an increase, it will be a loss. So there's discount receipt here of 160. Discount received of 160. So I'll simply come here and say discount received. How much? 160. If there are no, if we have any other, then we can put them in the inner column. But if there are no any other, we just put them in the outermost column. So what this means is that we have to work out the debtors to see. There's something here about the debtors. Number 5. Bad debts, 80,000 were written off during the year. The allowance for doubtful debts is to be maintained at 5% of the outstanding accounts receivable at the end of the year. So we have to work out the debtor account. Let's work out this debtor account and see how it goes. Debtor account. Let's work out the debtor account and see how it goes. The debtor account. Now, debtor, we start with the balance, of course, balance that we started with that year. So accounts receivable, this is the balance. Debtors is normally an asset, so it's a debit balance. So balance brought down is 2,000. So the debtors, balance brought down 2,000. Then you have nothing. Sales and purchases on credit. So sales is what will increase the debtors. So sales on credit amounted to 8320. So we'll have to capture that one here. Credit sales 8320. Good. So we are on the right track. Then next. Collections from accounts receivable. It means some debtors paid us. Collections, so it reduces their liability. So collections from accounts receivable 7560. Basically they paid collections 7560, and you can see it reduces their liability. This money hit our account. It's here, 7560. So that's how it goes. Then so bad debts 80. So bad debts, this one has the effect of reducing the debtors. Bad debts 80. And then this allowance, let's leave it. For now, that's what we are after. There is something about discounts. Discounts allowed to 80. Discounts allowed. Remember to restrict the zeros because you are not working with them to 80. They can easily confuse you. So discounts allowed to 80. So what else? Do you have anything else? Nothing else. So let's close this account. Let's close this account. The side with the highest figure will take the day. So let's add it. Let's add 2000 plus 8320. Of course, this side has the highest figure. You can see this is 10,320. So this will be used as the balancing figure. The difference will come here. So we'll simply add 7560 plus 80 plus 280. That one is 7920 minus 10320. 10320. This gives us 24. So debtors is 24. This is balance. Carry down. That is the debtors. Now, the question here that we ask ourselves is bad debts is no. The allowance for doubtful debts is to be maintained at 5% of the outstanding accounts receivable at the end of the year. This is the accounts receivable at the end of the year. So 5% of that is 5% of 24. This is should be 120. 0.05 times 24. 0.05 times 24. That gives us 120. Good. So then we compare 120 with what was already there. What was there was, I think, 100. Yeah. Allowance for doubtful debts. What we started the year with was 100. So there's an increase in the allowance for doubtful debts. Increase of 20. So it's not a decrease. So it's not an income. So we've settled that one. We'll have it in the expenses. So here, since this is the only income, we'll simply come back here and say 160 in the outermost column. Then we go straight to expenses. In fact, for expenses, let's start with that. Increase in allowance for bad debts. How much was it? 20. We only take the increase because the 100 has already been captured. So we only go for the increase. Now it's 120, but we are interested in the increase, which is 20. If it had decreased, we would have done the same. It would have been, maybe if it had decreased to 80, it will be 100 minus 80, then that decrease is what we'll have included under other incomes and gains. Since it's an increase, it will come under expenses and losses. Okay, so we proceed. We've already captured that one. Thanks to us. Let's proceed now. I hope you are enjoying. So, where are we now? Where are we? Oh, we are trying to go through that. Now, let's again. These are the following transactions were carried out through the bank account. So this is what he paid. So let's go with this list. Whatever he paid that year, it simply means that that is an expense for that year, and we are interested in now the expenses. So electricity expenses 260, but this electricity had a lot of stuff, so we'll just go back. Electricity expenses paid is 260 because it has workings. I'm very sure it has working. Let's put it in the innermost column. So this is what was paid. There was an accrued, I think somewhere here, accrued electricity as at that 1st March 76. So accrued 76. So it means this is part of the expenses for this year. And I think there was also another electricity at the beginning. Electricity expenses. Yeah, this one. Electricity expenses accrued 60. Now, this accrued was for the previous year. It is not for this year. It is for the previous year. But it had just, toppled over. It has been carried forward to the following year, which is now this year. So this is not an expense for this year, so we less it. We don't want it. But the accrual for this year, this 76, is actually for the current year that we're talking about. So that's why we added. So we are going to less the accrual, the previous year accrual. So we say less, there's no need of showing less. We'll just say previous year accrual. Previous year accrual. How much was it? 60. So we less like that. So what will we get? 276. 266 and 60 will go, then 276. Yeah, like that. So we are done with the electricity. Then let's go to the next one. The next one is general expenses, 140. I doubt if there is anything on general expenses. Though my body is flexible, I can always come back and work on it. For you, you need to be very careful when you're working with your, especially in an exam setup, you are not allowed to delete. Interest on loan, 120. This was paid, but there's something also about these loans, so we need to have a careful look at it. Interest on loan. Interest on loan. We need to take a careful look at this. Though what was paid was this, but is this what was supposed to be paid for the whole year? So we'll come here. There's something about interest on loan. That's the importance of going through the question. Interest on loan. Loan interest paid was for half year up to 30th September. Loan interest paid was for half year up to 30th September 2020. So let's delete this so that we can have some working space. Loan interest paid was for half year up to 30th September 2020. Remember, this year starts in 1st April 2020 and ends in 30th March 2021. So this is actually half year. So loan interest paid was for half year up to 30th, which is 120, which is okay. It's okay. So it means if you're working for the whole year, it will be 240. But again, there's something on this loan that you need to take care of. Maybe it will have some effect. There was some 400 shillings that was paid. I think I saw it somewhere. Loan repayment on 30th September. Yeah, this must have a very huge effect. Loan repayment 30th September 2020 was 400. So let's get it right. From March to September, the interest is 120. Then in September, we paid a loan of 400. The whole loan balance was 2,400, I think. Let's see. We can confirm it. Yeah, 10% bank loan is 2,400. You can see it here. So in September, we paid, in September, we started the year with this. In September, we paid 400. So it means beginning October, we had 2,000 as our loan balance. And this loan attracts interest at the rate of 10%. So it means we will work out 10% of the remaining balance, which is 2,000, for the remaining 6 months, times 6 over 12. So for the first, now let's get it clear here. Let me just delete this so that we can now be on the same page. The first 6 months we will work with 10% of 2,400 times 6 over 12. That is the first 6 months, and this will give you 120, because this will give you 240 times this, of course, 6 over 12, that is half 120. And then the remaining 6 months, it will be 10% of 2,000, because we had paid 400 times again 6 over 12, the remaining half of the year. So this will be 100. This is 200 times half. This is 100. So that the total interest for the year will be 220. That's how we go about it. So we'll simply come here and say interest on loan, first half how much? 120. Second half, how much? 100. This is 220, like that. Very simple. So this will be 10 over 100 times 2,400 times 6 over 12. And then this will be 10 over 100 times 24 minus 400 times 6 over 12. You get that? That is what interest on loan will give us. Now let's proceed with our question. I hope you are really enjoying. So drawings doesn't feature here. It comes in the balance sheet. Loan repayment 400. We are done with that. That will actually have now the effect on the other end. Collections from accounts receivable. No. Proceeds from sale of motor vehicle. And let's see if we have a gain or a loss. Yeah. Gain. Oh, it could have affected our income. So we need to work this one out. Proceeds from sale of motor vehicle. This one we need to work it out because the motor vehicle is sold. We need to know whether it's a loss or a profit. It will have to be captured here. So let's just open a motor vehicle account. Things are getting hotter here. Let's open a motor vehicle account. Where do we open a motor vehicle account? Let's open a motor vehicle account up here. The most important thing is for you to understand. That is what I normally say. So motor vehicle account. Let's have it there. So where do we start from? Motor vehicle account is motor vehicle account net book value is 3,000. So we'll say balance brought down 3,000. That is at the start of the year. Balance brought down. It's an asset. So we'll start right from there. Motor vehicle account will start from there. And then we really need the whole of this motor vehicle account. Let me just read something here. The business depreciates motor vehicle at 20% per annum on a reducing balance method. A full year's depreciation is provided on a motor vehicle acquired in the course of the year, and no depreciation is provided on a motor vehicle disposed of in the course of the year. So the business depreciates motor vehicle at 20% per annum on a reducing balance method. A full year's depreciation is provided. Then there was also something. The motor vehicle disposed during the year ended at 1st March 2021 had been purchased at, I think this figure was 1 million, and had an accumulated depreciation of 4. This is where I think this is what is of our interest. So we'll simply come here and instead of dealing with motor vehicle account, let's just go straight to the disposal account. Motor vehicle disposal account, and then we'll say this vehicle that we are talking about was valued at 1,000. Yeah, that one is straightforward. Our interest is on loss of. So the motor vehicle disposed during the year had been purchased at 1 million and had an accumulated depreciation of 488. Good. So we simply come here and say accumulated depreciation 488. Accumulated depreciation 488. How much was it sold for? Sell proceeds. Sell proceeds, I think we'll just talk of bank account because this money hit our bank account. How much was that vehicle sold for? It was sold at, the figure was here, proceeds for sale of motor vehicle for 80. So it was sold at 480. Yeah, and we are done. So this is what we need to capture. So this will be 1,000, 1,000, and then balance carried down, which in this case now will be a loss. This definitely will be a loss because it had depreciated by 488 and we sold at 480. We are supposed to sell it at 512, which is the difference between the value and the depreciation. So we sold at 480. That means the difference here is 32. 488 plus 480, this is 968. The difference is 32. So this is the loss. So we simply come here and say loss on disposal of motor vehicle, 32 shillings. Loss on disposal of motor vehicle, 32. Like that. So we are done with that. So let's continue with our journey. This journey is so interesting. Salaries and wages, 640. I don't think if we have anything on salaries and wages, I've not seen anything. So salaries and wages, 640. Next. Purchases of furniture, payment, that's capital, yeah. So we are done with all that stuff. Bad debts of accrued electricity, we are done. Bad debts of 80 were written off. Bad debts written off, that one is also considered here as a loss. So bad debts written off, 80, capture it, then go back, continue with our journey. The allowance for doubtful debts, we are done. We captured that one. It was the first thing to be captured during the year. Discounts received 160, allowed discounts were 280. So discount allowed to 80, that's a loss to the business. Discounts allowed to 80, good. Moving on pretty well. Loan interest paid for half, we have captured the loan. The business depreciates motor vehicle, now depreciations. This is a depreciation. So let's go straight to depreciation. Depreciation. And depreciation will have motor vehicle, will have furniture and fittings. I think those are the ones I've seen. So let's start with the motor vehicle. The business depreciates motor vehicle at 20% per annum on a reducing balance basis. A full year's depreciation is provided on a motor vehicle acquired in the course of the year, and no depreciation is provided on a motor vehicle disposed of in the course of the year. Our vehicle was acquired or disposed? Our vehicle was disposed. It was not acquired. No depreciation is provided on a vehicle disposed of in the course of the year. So we are not going to provide depreciation for that vehicle that was disposed of that year. So what does that leave us with? Simply, we started motor vehicle with how much? 3,000 was the net book value. 3,000, and we disposed of vehicle that was worth how much? 1,000. So that leaves us with a figure of 2,000. That leaves us with a figure of 2,000 as it leaves us with a figure of 2,000 as the value of the motor vehicle. A full year's depreciation is provided on a motor vehicle acquired in the course of the year, and no depreciation is provided on a motor vehicle disposed of in the course of the year. In fact, what we do is very simple. The depreciation for this motor vehicle, it was valued at 1,000 and it had depreciated by 488. 488. I think that was the value of the depreciation. Let me just check. I think it must have been the value of the depreciation. I think we computed it somewhere. Just check that one. So we will take 1,000 less the value that is remaining after the depreciation. If you check here, where is that account? The accumulated depreciation is 488. So we'll simply take the value of this vehicle minus this accumulated depreciation, which is 512. So we'll have to less 512 from the 3,000. Rather, we can say 1,000 minus 488. This will give us 512. So 3,000 minus the 512. 512, which is the, we are not going to depreciate this. This was the value of the vehicle. Accumulated depreciation is depreciation that has been there over time. So what was the remaining value of this vehicle for this year was actually 512. So in this 3,000, this vehicle's value was only 512, and we don't want to depreciate that vehicle's value because the instruction is no depreciation is provided on a motor vehicle disposed of in the course of the year. So we bought it at 1,000. The accumulated depreciation so far was 488. So its remaining value was only 512. We will have depreciated it, but the instruction is very clear: no depreciation. So we get rid of that 512, so that the remaining amount will now be depreciated. So how much will be the remaining amount? It will be 2488. 2488. So it's this 2488 that we are going to subject to depreciation at the rate of 20%, which will give us 2488 times 0.2. That gives us 497.6. That will be the depreciation for motor vehicle. So 497.6. 497.6, like that. And then for the furniture and fittings, we simply come back here. Furniture and fittings is to be depreciated at the rate of 10% per annum on cost, and is prorated to the period used in the year. The additional furniture was purchased on October, while the cost of furniture held was 1/6. Now that we've already been told that it is depreciated on cost, there's no need of even referring anything. The cost is here, 1/6. So you simply take 10% of 1,600. And this, remember, only applies for the first half of the year. First half. Because another set of furniture was bought on 1st October. So 10% of 1/6 times half. So this will be 800. 10% of 1/6 is 160. 160 times divided by 2 is 80. I hope you've understood how it's going. The cost of the furniture was 1,600. Furniture is to be depreciated at the rate of 10%. 10% of 1,600 is 160. But this is for the first half of the year. The second half of the year, the value of the furniture will change. We'll now have 1/6 plus whatever it is that was purchased on 1st October 2020. So what was the purchases? Purchase of furniture, 800. So the value of furniture changed to 2,400, and this is at cost. So now we will work out again 10% of 2,400 for the remaining half of the year. So that this will be 10% of 2,400 is 240. 240 times half is 120. Good. So that's how it goes. So 120 plus 80. 80 is for the first half. 120 is for the second half. This gives us 200. So that is the depreciation for furniture. So furniture, come here, furniture, say depreciation is 200 shillings. Just like that. Just like that. Do you have any other depreciation? Do you have any other depreciation? Freehold, motor vehicle, furniture, there's no any other depreciation. You might want to add this. They are in the inner column, so you might want to add this to get 697. Put them there, and then you will be done with that bit. You will be done with that bit. What else is remaining? Let me check on this question paper, because ours sometimes loses some stuff. I think we're done. So let's add this. Then the total will take the total of the outermost column. I hope we have captured everything. So we start there 697 plus 280. This was 497.6, so that we don't get the wrong answer. So 697.6 plus 280 plus 80 plus 640 plus 32 plus 220 plus 140 plus 276 plus 20 plus, we have another one. Hope I've calculated everything. 2385.6. So 2385.6, and we less. So we are going to go up there, get that 2800. 2800. Sorry, this question is a bit lengthy, but it's also because I'm explaining. For you, when you are doing it, you need to be very fast. Minus 2385.6. That gives us 574.4. So this becomes our net profit. And this marks the first part of it. This will give you 12 marks. Let's go now to the second part. Let's go to the second part, alpha, omega, and we say statement of financial position. Statement of financial position. Statement of financial position. This is as at 31st March 2021. As at 31st March 2021. So that's how it goes. So we'll have again shillings, and shillings. So 000, 000, and 000. And then we'll start with the non-current assets, freehold property. Freehold property, that one I have not seen anything. So it will be 2424. I hope those are the figures. Then you go to motor vehicles. Motor vehicle. I'll take the cost as it is, 3,000, and then 497.6. Then we less. Those are the figures. You can just confirm. Furniture and fittings. Furniture and fittings. No, motor vehicle, this will change. It will change because of we lost some asset here. Now at the beginning it was 3,000. At the beginning it was 3,000. That was the value. And furniture at the beginning was, of course, we did some workings. Furniture at the beginning, the value was 960. 960. I think let's just work with 24. And then the depreciation now will be accumulated. You have the accumulated depreciation for furniture. What you are going to do is very simple here. Yeah, the accumulated for furniture most likely will be, no, it was 16 and it had depreciated to, they have told us the cost was 16 and the accumulated depreciation was 96. It had gone from 16 to 960. So it means accumulated depreciation was 640. That's what we are going to work with. So 640. So it was 640. That was the accumulated depreciation plus depreciation now for this year, which will now be, which we have the figure here, 200. So it will be 840. 840. This is for furniture. So 840, like that. So 24 minus 840. 24 minus 840. This should be able to give us the new figure for furniture, which is 1560. Then for motor vehicle, 3,000 minus, we started with 3,000. Then we disposed of that vehicle of 512. So we have 512. So actually it will be 512 plus this 497.6, and then you should be able to get the figure. So 512 plus 497.6. This will give us 1009.6. So I'll just delete this 1009.6. 1009.6, and then that minus that will get, what is it? Is it 1990.4? 1990.4. I think that should be the answer, 1990.4. So then let's add this and we'll have our non-current assets. So 1990, 1990.4 plus 1560 plus 2400. That gives us 5950.4. I hope I've captured that figure right. 5950.4. Then we go to current assets. Current assets, we have inventories. Closing inventories, we have accounts receivable. Accounts receivable. So let's pick our inventory. Inventory was, I think we had worked it out. I remember 1720. So we have it up there. We just gotten it from our 1720. Accounts receivable, I think the closing balance that we had was 24. We had 24. It's part of the workings. I think it's somewhere 24. Must be somewhere. Debtors 24. This is the figure. Minus 120. In fact, we are going to do minus 120. Though the 120 you can still push it to the current liabilities. And now that we are here, let's just finish it here. There we go. Then the next item here is we are interested in current assets. The bank, this was an overdraft. This was an overdraft, so it will not come under current assets. So it will not feature under current assets. Do you have any other asset? Current asset, current asset, current asset. I doubt if we really have any other. So if we don't have any other, let's get the total. Let's get the total. This will give us, this is 3600 if I'm not wrong. This is 4600 if I'm not wrong. Because this is 006 1 4600. So let's add this. This will give us 450. This 15 110. 1 of 10 554. Is it? Tired now. Now growing tired. Now growing tired. Then 550. Let's look at. I think I've captured this computation right. Let me just do it again to be sure. 5950 plus 4600. That should be able to give you 10550. Yeah, 10550.4. And this is 1720 plus 2880. No, this is where I think we are wrong here. 2400 minus 120. 2400 minus 120. That gives us 2280. This is 2280. So we were almost getting it wrong here. So 2280. 2280 plus 1720. That gives us 4000. So this is 4000. So this will give us 50.4, yeah. Then 99. 50.4. Okay. Let's work with that. This becomes our in fact, let's just do away with that. So this will be our total current assets. So let's do current liabilities so that we get the net working, the net capital employed. So current liabilities, we are on current liabilities. Let's go for that. We have accounts payable. Accounts payable. What's our accounts payable? Did we meet accounts payable? Oh, I think it will need some workings again. That one must need some workings. I remember it. We must have some workings. So accounts payable. I know you're tired, but let's just finish this. Accounts payable is 1520 because it's a liability. Balance carried down. 1520. Yeah. Then there are purchases which were done on credit 7600, so that increases the liability. So purchases 7600. This one. Then there were some payments Proceeds from sales, salaries, purchase of furniture, payments to accounts receivable, 7760. So payments, 7760 from the bank, of course. And then, do you have any other thing? There was also discounts. Yeah. Discounts received amounted to 160. So discounts will serve the purpose of reducing discount received. 160. It is they are the ones who give us the discount. So this will reduces the ability. So then let's get the total. I hope there's nothing else remaining. So 7760 plus 160. Which side? I think this side looks like it has the highest figure, the credit side. So let's, this will be 1520 plus 7600, and it's also expected it to be the highest. So this is 9120. So 9120. Then we'll have balance carried down here. So this side will have 7760 plus 160. 7760 plus 160. That gives us 7920. So minus 9120. This gives us 1200. So 1200. This is the difference here. 1200. Good. So 1200 will come here. 1200. Accounts payable 1200. Good. Then I think there was also a bank overdraft of 640. Bank OD 640. And then what else? There were accruals, of course. Accrual of 76. This one, electricity expense accrued by 76. So we'll capture it. Accrued expense, accrued electricity expense of 76. Then there was this interest. There was something about loan interest that we had not paid. Remember, we only paid, the bank showed that they had only paid 120, but the total was, interest on loan 120. But we had calculated and found out that it was supposed to be 220. So interest on loan that is accrued. So we'll just talk of accrued loan interest. This is 100, like that. 100. What else is remaining? Anything that is remaining again on this? 10% bank loan. Yeah, you can put that one as a long-term loan, but 10% bank loan, let's just treat it as a short-term loan. So 10% bank loan, 10% bank loan. This will be, now we have a balance of 2,000. It was 2,400, but now it's 2,000. So let's get the total. I don't think if we have any other thing. So this will be, I don't want now to calculate this on my own. Let me use the calculator. So this will be 12 plus 640 plus 76 plus, of course, 2,100. This gives us 4016. 4016. We less from that. So this will be 5950. 5950. Let's get the calculator. 5950.4 minus 4, plus 4,000 minus 4016. 4016. That gives us 5934.4. 5934.4. Let me just confirm that figure. 5934.4. Good. So then we say financed by. Financed by capital. We had already worked out capital. Our capital was 5,600. So we just bring it to the outermost column. And then, of course, we have net profit, because these are sole proprietor. It's quite straightforward. So net profit was, just pick it from here, 574.4. 574.4. 574.4. Then I think there was a drawings of 240, if I'm not wrong. Let's just confirm that figure. Drawings of 240. I know you are tired and we're almost done. Drawings 240. Yeah, drawings 240. And drawings we less because that one is the owner is reducing on his capital. So 240, so we less. I hope this will give us that same figure that we have, because what generally what this means is that this is net capital employed. Net capital employed. Non-current assets plus current assets minus current liability is net capital employed. And this one is also net capital employed. So if this is net capital employed and this is also net capital employed, they should balance. They should balance. But let's do the computation and see if they are actually balancing. So we'll come here and say 5600. If they are not balancing, oh my God, there will be something wrong, and we'll need to go back and work out, find out again where the problem could be. 240. All indications are has balanced. So thank you. We are good to go. 5934.4, 5934.4. So this is net capital employed. Put double lines to show that is the answer. And this is also net capital employed, double lines, so that it's actually balancing. Everything done well. It has taken us 1 hour 12 minutes around there. 1 hour 12 minutes. But for your case, in an exam setup, ideally 30 minutes. I saw this question was quite huge. That's why I say that most it should take you 40 minutes. But 30 minutes is the ideal time for a question like this. And enjoy it while you are doing it. Thank you. You can also enroll to our classes. We have classes at a very affordable cost. You can read at your own free time. You can read at midnight. You will get us there midnight teaching everything, lesson by lesson, lesson by lesson. We've captured it for you well with so many worked examples. Try us and you'll never look any further. So thank you. Welcome.